Hey, what's going on, everybody? It is James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for December the 2nd. So, of course, today is Cyber Monday, so I've got something really special for you guys. I told you that I've been working on this trading course. I had a course that I put together 6 or 7 months back. I had sold it to folks in my Facebook group, but I went back through it, and I just wanted to completely revamp it. So that's what I've been doing the last couple of weeks, is shooting new videos, and then I just went so much more in depth than I expected to. So here's where I'm at with that. I did not get all the videos done, but I promised you guys I would show you what was coming, and that way if you decided to join, you knew what you were getting. So I said, hey, if you want to wait till Monday, you can. So today being Cyber Monday, I wanted to show you around the members area, and this does have all the placeholders and things of what's to come. So basically there's a getting started section, talks about how to use TradingView, talks about keeping a trade journal, talks about a bull market versus a bear market. You can see that video is not done yet. It says coming soon. We have the fundamentals, things like how to read a candlestick chart, how to read a line chart, how to use relative strength index the proper way, how to use bullish divergences, bearish divergences, hidden divergences, how to use trend lines and price, trend lines and RSI, trend line examples, moving averages. There's actually 4 different videos on moving averages. These are very, very critical with trading, and they're a big part of, my strategy that has kept me from losing tons of money. And they're also a really good strategy for whether you're talking about day trading, swing trading, or position trading. We've got a video on exponential moving averages. By the way, all of these videos are done. That's why they don't say coming soon. The fib levels going to be coming soon. I went back and watched my old video. Felt like I could do a better job, so I'll be shooting that this evening. Support and resistances and how those play a role in trading. And then, of course, going to be covering gaps and how to trade the gap, right? How to fade a gap and how to long a gap. Then we have the patterns that I use in my trading, things like double tops, double bottoms, rounded tops, rounded bottoms, different triangles, wedges, head and shoulders, and candlestick patterns. A lot of times you can use a candlestick pattern to confirm one of these other types of patterns. So, for example, railroad tracks, for example, tweezer bottoms, empires, or what's called a morning star, an empire star, things like that. Money management. This is a crucial part. It's probably the most important part of trading, and it's the part that most people never talk about, right? Fortunately for me, once upon a time, I played poker for a living. Money management was a cornerstone of being a successful poker player, so that was one skill that I did bring over to trading with me. We'll talk about things like position sizing, stop losses, risk management, and also how to cover your trades as well. And then finally, we'll get to the putting it all together section where we talk about the trade dashboard, so the actual sites themselves and what all the different moving parts are, limit orders versus market orders, when you should use each one, understanding the different time frames. This is something that's critical. Again, a lot of people never talk about this. There's a huge difference in doing a trade at, say, 3:35 Central Time and doing a trade at 5:55 Central Time, right? One of them is 5 minutes before daily close. One of them is in the middle of the day when it doesn't really have any real impact. So it's critical that you understand that stuff, because the trades are going to play out differently on the time of the day. The volume is often different, and just the volatility is a lot different depending on your time of day. We're going to talk about retests. We're going to talk about how to set up alerts so that you're not having to actually stare at a chart 24/7. We're going to talk about volume and how volume can confirm or kind of reject the idea of rallies or downtrends. And we'll talk about how to trade on margin, again, the right way so that you're not blowing up your trade account. And then finally, I'll go over some setups that I use in my trading. I'll talk about a reversal setup when I want to go long, the reversal setup that I use to go short. Again, these setups work on the 5-minute, the hourly, the 4-hour, the daily, etc. Right? They work in all the different time frames. We'll talk about what's called a far from moving average trade. We'll talk about trend trades, and then also we'll talk about something that I've never seen anyone talk about. And I will say that of all this stuff, most of it is stuff that I've learned other places and then adapted to crypto just through experience and stuff that I learned in the stock market. For example, this 3-day and 12-day indicator stuff, completely mine. Okay. Completely invented this. It is my creation. It is literally something that I've never seen taught. I don't believe it's taught anywhere else. I literally created this. And this is probably one of the most powerful things that I'll teach in this whole course. And the 3-day part, it actually works in cryptocurrencies. The 12-day part is something that works in the stock market. Again, I doubt you'll ever find anybody that says, hey, let's look at a 12-day chart for stocks. It's such a random, weird number. It just so happens that it works in the stock market. The way that I came up with that, long story short, I found out that some certain patterns and certain indicators worked really well on the 3-day chart in cryptocurrency. And then what I figured out with the help of a friend who does more stock trading, he said, look, dude, the stock market it moves about 4 times slower than cryptocurrency because it's not as open in as many hours, right? Cryptocurrency is open 24/7. And so he said, I bet if you take that 3-day indicator and you put it on a 12-day chart in stocks, it would work the same. And guys, it works the same. It was the most amazing thing. I was actually able to call a drop in the NASDAQ back in July, just a couple of days before it happened, right? And then ended up taking like 10-15%. So again, that's what's included. You can see there are a lot of videos where it says coming soon. That's because they're not done. I can knock out about 3 or 4 of these videos a day, right? Between shooting them and then going back to edit them and doing a proper job, not rushing it and not having a lot of mistakes and stuff. So it's probably, realistically, to get this to the point that I want it to be at, it's probably going to take me the next week, maybe even the next 2 weeks, right? I didn't want to do a small course. I said to hell with it. I'm going to go completely overboard and just put everything in there. So that is the course. So there's going to be a link below this video. You can click on that link. It'll take you over to a sales page, and you can read the sales page. And if you want to join right now, this is on a special deal. I'm doing $197 for the entire year, right? So you get 12 months access for $197. If you're wondering why $197, James, it's simply because basically I have to pay, right? ClickFunnels is a couple $100 a month, the software itself. I've got to pay Vimeo a couple $100 a year. It's $199 a year for Vimeo to host the videos, etc., etc. So that's the reason it's a recurring thing once a year. You will get a rebill reminder before you rebuild. And if something happens and you forget about it and you notice, hey, shit, I just got billed $197 a year from now. If you're not trading anymore, if you don't need it anymore, you can hit me up, within a reasonable amount of time. And of course, I will refund the rebill for you. I'm not going to try to stick it to you and say, oh, you should have canceled yesterday, right? So if you get rebilled and you forgot about it, just let me know the next day or, within a day or two, and I will take care of it for you if you're not interested at that point. So that's it, right? Again, if you want to check it out, there'll be a link in the description. Let's go ahead and jump into today's update video. Before I jump into the content though, please do me a huge favor. Go ahead and hit the thumbs up button on this video, and don't forget to subscribe to the channel if you haven't already. So the first thing that I want to take a look at, I actually want to take a look at the stock market. The reason I'm going to look at this is because I had this random, weird argument or debate, whatever you want to call it, with somebody on Twitter today who claims to be a professional trader. And they said that we're not in a bear market, that it's just a correction. And they tried to point to the stock market as an example of this, saying that the stock market pulled back several times between 1980 and 2000, and none of them were bear markets. So guys, I just want to point this out. There is a huge difference, right, in something like this, where price drops real drastically and then starts going right back up, right? Those are corrections. And something like this, where it grinds sideways. Like here, it grinded sideways for about a year and a half. That was a bear market, regardless of what that person said. That was a bear market, okay? These were corrections. These little quick dips where they shot right back up. Bam, right, bam, right, bam. Those were all corrections. This was a bear market, right? Up here, bear market, correction, 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 right? All those were quick and painless. When you look at Bitcoin right now, it is not being quick and painless. It is not a correction. It is a bear market. It has been a bear market since December of 2017. The rally that we had from April through June was a 3-month rally in a 2-year bear market. Common sense, guys. Don't drink the Kool-Aid, okay? Do not drink the Kool-Aid. Having one small rally in the middle of a 2-year downtrend is not a bull market, okay? It is not. Watch. Very simple stuff, okay? Very, very simple stuff. All it did was come up and test resistance and fail. It is a bear market. You have to trade it as a bear market if you want to do well. If you try to trade it as a bull market, you're going to get smashed, okay? In fact, before I jump into the other charts, let me show you something really neat that I actually saw somebody else talking about, and then I started playing around with the tool. It was this fib tool. See if I can find it. I don't use this, okay? I just want to be very clear. I don't normally use this in my trading, but I might start playing with it a little bit more. So it's called the Fibonacci resistance fan. If I draw from the top to the bottom here, and I put this on a log chart, look at this crazy thing. Came right up to that Fibonacci level perfectly, right? And then it found support through here. I don't know how accurate it is, right? It only had one touch out of all this, but I did find this very interesting. And basically what they were saying, and this is a trader that I actually talk to on a fairly regular basis, not like a daily conversation, but he's an actual trader, right? He's not a CT guru or anything like that. He's an actual trader, but he's thinking this thing's going to drop down to this level, right, sometime in early 2020, which, if you look, lines up with that level down around $4,000 to 4,300 that I've been talking about for months now. So I did find that really interesting how this 61.8 fan lined up right with that area, right? And again, it lines up right around $4,000 in February 2020, which is exactly what I was saying, was that I thought we'd hit, the fill in this gap sometime in February. So I hadn't used it before, but I thought it was interesting. Thought I'd show that to you. Okay, let's jump over to, let's start with a weekly chart today. So this is the weekly Bitcoin chart. We've got this red line, that's our EMA. We're nowhere near it, so I'm gonna turn it off. This orange line doesn't matter to me, but some people are saying it matters. It's a 100 moving average. It's sitting around 73.52. We're underneath it, right? So I'm gonna turn it off. Really what matters to me is that we're playing inside of this RSI range and that we have failed to break above this key level of resistance, okay? So not a lot to talk about on the weekly. It's under resistance, okay? The next level that I'd really look at on the weekly is going to be this level down here around $6,900, okay? That acted as, had a fair amount of support / resistance back here, and then of course had some touches throughout the 2018 bear market as well. So I do think that's going to be support, and I think this supports this idea that I'm getting ready to talk about, okay, where we drop down to $6,900. So that's the weekly. Not much going on, right? We're underneath resistance, we're above support, we're in that range. If we take a look at the 3-day chart, so this is of course my favorite chart, right? You can see here that we did bounce off of resistance. We're trying to come back down to the bottom of this box, and this candle, this red candle, actually does close today. It closes in about 2 hours, okay? So what I'd really like to see is this thing move down to about $6,900 and then move up from there, okay? Get down to the bottom of this box and then take a bounce toward this resistance level again, all right? And then I'd like to see it break through this resistance, get all the way up to the top of this box. And price-wise, what I'm looking for is to get down to about 6,900. This is ideally what I want. I want it to get down to 6,900, and then I want to bounce up to about like $9,000, somewhere up in this area, right? Come down here and then bounce up here. Now, if it does that, it'll probably look more like this. Probably look something like this, right? Or it does that. Has like a nice Elliott wave type of structure. Again, I'm not an Elliott wave trader, but something along those lines, and then an ABC that brings us back down and puts in some type of head and shoulders. Okay, so that's kind of ideally what I'm looking at. That's what I want to see happen, and I'll show you another reason that I'm thinking that might be viable. If we take a look at the CME, we have this gap, right? We have this gap up around $7,800, but we also have this liquidity gap down here. So right down here is a liquidity gap. Okay, so that's why I'm thinking $6,900, somewhere in that area where this price does come down, fills in this liquidity gap, shakes out some longs, gets some bears to go short, and then pumps up and wrecks those bears, right? Fills in that gap, maybe comes up to resistance, comes back down, right? And then up from there to that $9,000 level. That's kind of what I'm wanting to see. Again, things very rarely play out exactly how we expect or how we want them to, but that's logical, and that would be backed up. Technical analysis says that that's a possibility. So that's what I'm watching for on the CME, okay? And that's what I'm watching for on the Bitcoin side with the daily and weekly and everything. On the daily chart here, essentially we're sitting inside the same downward trend that we've been in for 5 months now. Our 200 moving average is way up here around $9,400. So I'm not super concerned about it right now. I do think we'll get a bearish retest at some point, but maybe not, right? Maybe we just get a bearish retest of the 200 on the CME instead. This down here was a classic bearish retest of that, upward sloping trend line. So that was very bearish. So again, this thing, I do expect it's going to come down a little bit before it moves up. And maybe it surprises me. Maybe it doesn't go to 6,900. Maybe it does fall all the way down to here to the bottom, which is kind of what I was thinking might happen a few days ago. So I'll still be keeping an eye open for that. And if it gets to the bottom, again, I still think it's going to bounce, but I'm prepared for the fact that it might just collapse. It's a lot of touches on that line. More touches, the weaker it gets. It could just absolutely collapse and go down here to this $5,000 to $5,500 area, which again, if you saw my videos, the last few videos, you'll know that's actually the trend target, right? If we draw a trend, so if we draw a trend from back here in July, right? We bounced off the 78.6. We came up here, failed just shy of the 50, and now it is possible that this thing will, go down, cut through the bottom of that, head all the way down to 5,500 to shake out the longs. And then maybe it goes up from there. Of course, if that happens, it's going to change the Fibonacci levels quite a bit. Right now, when I draw a Fibonacci retracement from the top to the bottom, then our golden pocket's right here with this old level resistance, right around 9,000 to 9,100. But if we do put in a new low down around 5,500, then our golden pocket change, and it changes to around 8,600, okay? Which still, it would make sense. I mean, there is a reason that would make sense, because if you think about it, 8,600 was right there at the top of this neckline, okay? So it's very possible that what we actually get is a drop down to this level and then some type of pump back up to this level here, right? Very possible, and probably wouldn't take that long, right? You look right there, some nice convergence, right? Comes together right in that area. So a couple different scenarios, right, that we got to be mindful of. Can't just go all willy-nilly and say, oh, it's touching support, I'm going to go long here, right? Got to make sure it's backed up by other factors. So that's kind of what I see on Bitcoin. I've been day trading Bitcoin the last few days. I haven't taken any swings. Took a couple day trades yesterday, which worked out really, really nicely. And I'll probably continue day trading this for a while. I probably won't look for any type of swing trade unless we get into like a really nice golden pocket zone. And again, this is just that liquidity gap that I was talking about needing to fill in. We're underneath the 4-hour trend line. You can see here that this was a textbook bearish retest. Fell under it, came up and retested it. I did short it right there, and then I closed it about an hour or two later. Okay, maybe a few hours later. It was a pretty nice trade. I don't remember exactly what I got off of it. Maybe like 1.5% before leverage, right? And then I shorted again on one of these little wicks here before bed, would have been this wick, and then closed it right before I went to sleep this morning. So pretty classical stuff, nothing too surprising. If we draw an hourly trend line, this thing's kind of messy. Okay, it's real messy. Again, we just had a bearish retest here, another bearish retest here with a double top, right? So fairly easy to go short in this area and then ride this dump down, which is what I did. Okay, that was the first day trade I did yesterday. So that's kind of what I'm looking at on Bitcoin. And let's talk about the total alt market cap. Again, kind of like I mentioned yesterday, really not a lot to talk about here. Okay, it's in this range, it's stuck in this range, it's got support here, it's got resistance up here, it's got resistance right through this area here, right where my dotted line is. So all through here is resistance, right? So until it breaks out of this range, I'm just not really going to pay that much attention to alts. Okay, if it breaks down, then obviously it doesn't really do anything for me because I'm not going to short alts. I basically trade Bitcoin right now. If it was able to break north, then I might take a look at going long on some altcoins with some smaller position sizes. So that's kind of where altcoins are at right now. If we take a look at the total market cap, again, I do think, kind of like I mentioned in yesterday's video, I do think that this total market cap is trying to tell us, what Bitcoin is going to do in the future, right? When we look at this thing, the total market cap, right, including alts and Bitcoin, it's already come down to this level through here. If we look at Bitcoin, Bitcoin has not made it back down to that level, okay? Bitcoin's still way, way up here, which is the equivalent of kind of like up here on the total market cap, right? Bitcoin needs to get down to here to kind of be the equivalent of right here. So again, I think this is kind of leading the path a little bit. I do think Bitcoin will eventually get down to this level. And then I think the market cap's going to go down to this level and fill in this gap. I think Bitcoin will bounce and probably get down to this level as well, right? That's just textbook stuff. And then when we get down to that level, you know, like I mentioned in previous videos, we'll just have to watch and see what happens. If we get down to 4,100, we'll be under the 200-week moving average, and we'll just need to watch. And when it starts to go back up, if it starts to go back up, we'll need to see, is this 200 weekly moving average going to flip to resistance, or is it going to break right through it and start going back up? And I'll give you a good example of this. If we look at a Litecoin chart, let's look at one on, here we go. We want weekly. So this is what happened with Litecoin back in 2018, right? It fell underneath its 200-week moving average. It came up for a retest, okay? But it didn't automatically go down and make a new low. It actually made a higher low, and then when it broke above it, it had a nice, beautiful, bullish retest where you could have went long right there. And look at that, moonshot, okay? So we could see the same thing on Bitcoin. Bitcoin may end up coming down, falling underneath its 200-week moving average. I'll kind of show you what that might look like, right? Oh, Lord, too many lines on this chart. Let's get a cleaner Bitcoin chart up here. Let's go to, how about Bitfinex? Bitfinex tends to have higher prices than the other exchanges, but it's fine for this example. All right, so essentially what we could get, let's say that our 200 curls over something like this, or, well, say, does something like this, just something like that, right? If this thing ends up coming down underneath it, right, it could 4,100, it could go up to, you know, back up to the 200, and then it might do something like this, where it finds support, and then just moonshots, right? And that would be a perfect double bottom, and that would be a great place to look for a long setup. So that's absolutely possible, okay? The other possibility is that we don't break underneath it, that it acts as support like it did in 2015 and like it did in 2018, and then it comes down to it, right? Fills in all this stuff, goes up a little bit, puts in a nice double bottom on top of it, and then moonshots and leaves this gap sitting there, never to be filled, right? If we take a look at a volume profile and we go all the way back, put a couple years worth of history on there, the big volume gap is right here. I gotta get rid of these lines, they're driving me nuts. So the big volume gap is actually sitting right here, and it's entirely possible that we go in to this gap, put in some sideways movement to fill it in, and that's it. That we never go down. This is a pretty big line of volume sitting there, right? Which is this area right here. So it may be that that's it. That's the low, right? The 200-week moving average ends up being it, and we go on to our next bull market. For me personally, that's kind of what I want to happen. If I had to pick, that's what I want to happen. I think if we go down to 1,000, it would be great. You know, in theory, it's like, oh, I could buy so much Bitcoin, blah, blah, blah. I just don't know how long it would take to recover from that, right? And again, I play it level by level. I get these people who are like, James, what's the bottom going to be? You know, what kind of odds do you lay on this? And the reality is, you know, odds are just guessing. I can't really lay odds and say it's a 78% chance we're going to get here and a 22.4% chance we're going to do this, right? All I can say is, you know, these are the possibilities. And as price gets closer to those levels, I have to watch what kind of structure is forming on the chart. And that tells me what to expect, right? Looking at this, I have no idea. It could be that we fill in this, or it could be we fall under that 200 and go down and fill in this. And again, that's down around, you know, $1,500 down there, which means we probably retest these old highs back here around 1,300. Okay, so those are the options, and that's what I'm looking at, and that's the possibilities. But shorter term, like midterm, next couple of months, really what I'm looking for is a move up, you know, to 8,500 to 9,000. You know, maybe move down first, and then a move up so that I can get a good short off. Okay, somewhere up in this area would be a great place for me to look for a short setup. And then if it does move down to the 200, that's about a $3,000 to $4,000 profit per Bitcoin. So with all that being said, guys, please remember I am literally some guy sitting in a spare bedroom. Nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you haven't already, please be sure and give this video a thumbs up. And don't forget, you can check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and also where you can now join my trading course. All right, this is James with Crypto Common Sense. Trade safe.